Hey everybody, welcome back to another episode of Ryan Makes Sense, where we talk about personal finance, investing, and chart analysis. Today, we're going to be looking at a REIT, a real estate investment trust stock that pays a 6.4% dividend. This company does have a well-diversified portfolio of commercial real estate. We do know that commercial real estate is getting slammed right now. Um, People are defaulting on their payments. People are just letting it go into foreclosure. They're letting it become insolvent and so much more. So we're going to take a look at ticker symbol WPC. This is W.P Carey Inc. They pay a 6.43% dividend. Think of your REIT stocks such as V&Q, the Vanguard Real Estate Trust, ticker symbol O, Realty Income, a monthly dividend payer. So let's take a look at the chart, see where the stock price is going. Let's look at the current stock price. Does it deserve to be at $66 where it is today? Are institutions and hedge funds loading or selling the boat? Or are they accumulating? Without further ado, let's go ahead and jump on in. All right, you guys, we are looking at ticker symbol WPC. Let me move my head. Okay. So if you know my channel, you know me. We like to zoom out. So just looking at the day chart here, we can see the price used to be $86 and now it's $66. Again, we don't really care about the day chart. However, we see relative momentum is down, money flow is down and going further down. Looks like momentum on the daily is kind of collapsing a little bit, and the relative strength is getting weaker. So looks like more downside to come. Looking at the weekly chart, again, I prefer the monthly, but just kind of taking some mental notes as we go. Pretty bearish chart on the weekly. Again, it used to be $89, now it's 66. It tried to make a move upward right here. It did. It went from 66 to 73. The 365-day SMA rejected the stock. So that is not good. We are heading lower. And now the monthly, my bread and butter. So the first thing that I see that is a big red flag is this monthly candle right here. Let me zoom in. This candle right here, very bearish, very bearish. A very high wick followed by more downside in my opinion. What we have and what I can see here is an ascending triangle. So basically the stock, let's zoom out. So the stock was in an ascending triangle, which sometimes can be bullish, bearish, etc., depending on how it breaks. But you see how it trades in a narrow range, and then the confirmation of the breakthrough tries to go up to get momentum upwards. It fails, and now it's just kind of going to head down further. Again, a very bearish candle here. I would be on the sidelines for sure. Let's check the quality of the stock to see if this is something that we would want to get into once the dust settles. So just looking at long-term supports and resistances, it looks like right here is a good long-time support that goes all the way back to 2013. And this stock has been around since about 2000. So right after the dot-com crash, um, gonna have a long-term support there. We have a long-term support here, kind of going like this. And then if this fails, we have another, the stock price was getting support and resistance at this level, 32. So if this stock collapses, I think 32 to 22 is going to be like the sweet spot in my opinion. Let me bring this out much further. 32, so 22 to 32, if we do see a full-on collapse, that would be the area to get this if the stock is healthy. Now, what I mean by that is, do they have cash? Have they been disciplined, etc. So We can definitely see where the stock price is going on a weekly chart. Whoops, what did I just do? It's going downward. Momentum is trying to come back. Strength is kind of collapsing as well. So WC, we're definitely going to wait, but let's see what the true value of the stock actually could be. And they do pay a high dividend. Sales are beautiful here. You know, the stair step we want to see. EPS, again, the same stair step we love to see, but again, we need to we can see what's coming. So let's take the sales plus income plus market cap. So they make 1.67 billion. And they're profitable. They make 753,500,000. Correct. And they have a market cap of 14,300,000,000. All right, so now we're going to take the cash plus the cash and remove the debt. Total cash is 168 million, which is historically mid-range, so plus 168 million. Total debt should be in the billions. Total debt, yep, 7 billion, so minus 7,877,750,000. Yes, correct. And we're in USD, and total assets is 18.1 billion. Total liabilities is 9.1 billion. That's actually really healthy. That's almost a 2-to-1 ratio there. That's really healthy. That's actually the most healthy they've been except for last year. Yeah, looking all the way back to 2015, like they haven't had that big of a gap since 2015, 2016, whatever. We have a little bit of buying, a little bit of selling. I mean, relative to the shares that they own, not anything drastic or red flags there. Let's look at the income. I mean, just monstrous. Cost of revenue. What's their? It's less than their gross margins, 88%. Wow, that's really good. Net income has just been a beast. It's been really healthy. So what we need to do for this stock, I don't want to do that because I'm more of a charts person. Just looking at the chart, I can tell it's going to go lower, but what would make me feel better is if the story had a strong foundation from the company, which is like, okay, what are they experiencing on a monthly basis? Are people defaulting on payments, etc.? So I would look into that. Let's do the rest of our calculations here. So this, and then we're going to divide it by 211,550,000. So the fair share price is around $42, and right now we're at 66. So, and it's a dividend stock, so we are very overvalued in my opinion. I see this going down. If this can get if this can get to 32 to 24, that's like generational level dip right there for WPC. So I'm going to definitely create an alert here. Price below, let's do 42. Awesome. Oh, I want these to go to my personal. Okay. And I'm just going to check my alerts here. Desktop notifications, I do want to enable that. Wow. All right. Show an example, sure. Awesome. Okay. So it sent me a message on the side, so that's cool. All right. So we look good here. WPC again, you just want to watch for that dip. I'm watching for that dip as well, because that is a generational dip in my opinion. If you made it this far, if you like this content, please consider hitting the subscribe button. I really appreciate you, and I hope that I'm helping you, determine stock values, seeing what's worth it and not. Let's see what institutions are doing. I think institutions are probably selling. So institutions own 65%. I'm going to say maybe they're selling or maybe they're buying. I think they're selling. 65% was old data. The most up-to-date data says 69%, so a little bit of buying. Historically, you can see they're buying more. Vanguard added huge, BlackRock added quite a bit. So again, maybe this is a false flag where we're not going to see any dips, but I mean, just looking on the monthly chart, it's a little scary if you ask me. So yeah, we want to see it break this as well. So we could see it come up and test 69, but we're gonna wait. We have an alert set. Again, this is for real, no more fake outs. If you made it this far, hit subscribe, hit like, or if you dislike my content, you don't like me, hit the down thumb button. Have a good day.